Now, it's a company you might not have heard of, but it now controls 5% of the UK's gas supply, and it's one of the leading independent production companies on the continental shelf. That's because Serica Energy has completed deals with the likes of BP and Total to acquire the rights to 3 major North Sea gas fields, Bruce, Keith and Rum. The company has just announced its full-year results, which show it's now producing the equivalent of 24,000 barrels a day, with profits up by 30%. So the CEO, Mitch Flegg, joins me now. Mitch, very good afternoon to you.
Hello.
I mean, you've upped your exposure to the North Sea when the likes of BP have been reducing their exposure. What do you see in these assets that they don't?
Well, I think we can bring focus to these assets because they are material to a company like Serica. For BP, these were really very much below the level of materiality that they need in order to assign management time to the projects. So we've got a dedicated team that focus 24/7 on getting the best out of these assets.
I mean, what's remarkable, you've had ownership of these assets that you've acquired control from BP for 4 months. You've upped production already. What are you doing differently?
It is just that. We've got a fantastic team that we put in place. We inherited something like 114 people from BP. We've gone out and recruited and created 23 new jobs. We have a team of over 140 people now that are focused just on running these assets. Whereas the previous owners were looking at running a basket of assets, a portfolio of assets, and didn't necessarily give the true attention that these assets need. We're able to give it everything we've got.
I mean, the North Sea is notoriously expensive, of course, in a place to operate. Is it easy to keep a lid on costs?
I think it is. I mean, I think, again, it comes back to being smaller and nimble and able to control your costs and not have all of the overheads that go with running a major company. I think the place for BP and Total and companies like that still exists, and that is in running the more capital-intensive new projects. But for the older assets, the mid-life and late-life assets, such as Bruce, Keith and Rum, the fields that we've bought, we can keep a lid on costs, and a smaller, more nimble company can be more effective in getting the value from those assets.
Is it possible to talk about your break-even production price per barrel or barrel of oil equivalent?
I mean, it's a difficult number to put a handle on. We've said previously that the barrel of oil equivalent cost of what we're running is around $18 per barrel. That was under the BP stewardship in previous years. Right. Now, obviously, we're predominantly a gas producer. We're 80% gas, so it's a bit of a misleading number. But even at current gas prices and current oil prices, you know, we're still way above that. And we expect to drive those costs down because we don't have the overheads that the previous operator had.
So the current crude price is happy days. I mean, how long do you expect Brent to continue trading at this sort of level?
I think if I knew that, I probably wouldn't be here. You know, we certainly, for us, we're looking at continuity of prices. The industry has a habit of costs following prices, and we've had in the past huge cost inflation. When oil prices were over $100 per barrel, rig rates were higher, everything was more expensive. What we need is stability in prices. I think we are going to have, my personal view is we are going to have a period of stability, and unfortunately we do have a cost base that goes with that. So it is a good time, I believe, to invest in the North Sea, and that's why we're doing that.
All right, Mitch Flegg from Serica Energy, very good to see you. Thanks for joining me.
Thank you.